Globally, the rise of the British Empire is often attributed to ships, soldiers, and colonies. Yet the true driving force of this global dominance lay in a far quieter place, behind marble columns and in the shadows of mahogany desks. It was a financial system unlike anything the world had ever experienced, a machine that converted debt into power and money into a vast empire. Britain did not subdue the world merely with rifles and cannons. Its real conquest was achieved with credit. London's bankers managed to turn war, trade, and even societal shortages into instruments of financial growth. The story of how British bankers funded this global dominance is, in fact, the story of how money and power became a single entity, and how this system still manipulates the world we live in today. To understand this, we must go back to the 17th century, when England was far from the grand empire we know. At that time, Spain and Portugal ruled vast overseas territories, France was on the rise, and the Dutch Republic held the reins of global trade with its powerful navy and advanced financial markets. England, by contrast, was a small, fragmented figure, constantly suffering from chronic cash shortages. Wars with France and the Netherlands had drained the treasury. Kings borrowed recklessly and then failed to repay, frightening the markets. By the end of the 1600s, England's creditworthiness was in ruins. Without credit, you could not feed an army, build a navy, or project power beyond your borders. But in 1694, a turning point fundamentally changed Britain's fate. Parliament approved the establishment of the Bank of England. At first glance, the idea was simple. Wealthy investors would lend money to the crown to finance a war with France, in return for government bonds that paid regular interest. To manage the process, a central bank was created, a bank that could issue notes, accept deposits, and guarantee the repayment of loans. But beneath this bureaucratic structure lay a quiet revolution. The Bank of England institutionalized borrowing. The unreliable personal promises of monarchs were transformed into tradable securities. For the first time in history, the English state could borrow vast sums at low cost. This was the empire's secret weapon. Thanks to the public credit system, Britain could sustain wars long after its rivals had collapsed financially. While France, Spain, and even the Netherlands struggled under the burden of debt, Britain repeatedly used its deepening bond market as a resource. War was no longer just a battlefield. It had become a financial contest, and Britain had set the rules in its favor. The War of the Spanish Succession at the beginning of the 18th century is a prime example. How did a small island nation maintain armies on the European mainland and massive fleets at sea for over a decade? The answer was not greater resources than France or Spain, but uninterrupted credit flows provided by the Bank of England. Investors knew the bonds were guaranteed by the state. Customs duties and trade revenues secured the debt. Meanwhile, France repeatedly defaulted, losing credibility and being forced to borrow at crippling interest rates. War, once only about rifles and manpower, had become an extension of the bond market. Britain could endure longer than its enemies simply because it could borrow more. The system grew even larger in the 18th century. During the 7 Years' War in the 1750s, Britain borrowed over £100 million, a staggering sum for the period, to conduct operations from North America to India. Theoretically, wealthier and larger France could not keep up. The war drove the French crown toward bankruptcy, paving the way for the French Revolution. Britain emerged from this process as a global empire, accompanied by an investor class that accumulated wealth through government bonds. War was no longer just a national cause, but a profitable investment opportunity. Yet the story was not only about war. Trade was the second great pillar of this structure. In the 18th century, colossal joint stock companies such as the East India Company rose to prominence. These were not mere trading firms. They were hybrid entities where state, army, and corporation intertwined. While London investors expected profits from spices and textiles, these profits were essentially derived from conquest. The companies maintained private armies, bribed officials, and collected taxes from the Indian populace. This massive cash flow returned to the City of London, enriching bankers and bondholders. This system did not create a vicious cycle, but a growth cycle. Britain borrowed to fund wars, expanded trade through victories, paid its debts with tax revenues from trade, and the resulting trust enabled it to borrow even more. Admirals may have been thought to steer the empire, but the real helmsmen were the bankers controlling the flow of credit. In the 19th century, the system reached its peak. During the 20-year Napoleonic Wars, France relied on plunder and forced contributions, while Britain raised over £600 million through London's bond market. Interest payments sometimes consumed half the budget, yet investors continued to lend, confident in Britain's industrial power. This financial strength defeated Napoleon not only on the battlefield but also in the treasury. Here the story takes a darker turn. Financing the empire was not only about defeating external rivals, but also about establishing a mechanism of internal control. The burden of debt fell on ordinary people through taxes on tea, sugar, and tobacco. As the populace paid more for consumption, bondholders collected their interest punctually. Bankers became powerful enough to dictate terms to cash-hungry governments. History shows us that money and power are two sides of the same coin, and Britain perfected this formula by using debt as a weapon, trade as fuel, and finance as an engine. By the mid-19th century, finance had become a more effective force than armies. The Opium Wars are the most concrete example. On the surface, these conflicts were about trade disputes, but in reality they were part of Britain's strategy to prevent the outflow of silver to China. With the backing of financiers, opium sales ensured the flow of Chinese silver to London. When China resisted, the British Navy intervened, resulting in treaty ports and the solidification of Britain's financial supremacy. London was now not just the world's workshop, but its banker. Railroads in Argentina, mines in South Africa, all operated with British capital. The pound sterling became the world's reserve currency, and Britain enforced debt repayment through the threat of force. This was an empire run not by flags and garrisons, but by ledgers and credit contracts. The gold standard further cemented this power. By tying its currency to gold, Britain sold stability to the world, borrowing cheaply and lending at higher rates while aligning other nations' monetary policies with London. The winners of this system were London investors. The losers were the exploited nations. In India, grains produced for global market demand led to the deaths of millions from famine. The financial system displayed its ruthless logic: maximum return for investors, maximum destruction for the victims. Britain's dominance was not the result of military genius, but of a financial system that turned risk into opportunity and disaster into profit. Wars that bankrupted other countries enriched Britain. Trade deficits were forcibly converted into monopolies, and even crises became opportunities. In the 19th century, the rise of the U.S. was enabled by loans from London, British capital. The empire was not held by those who possessed land, but by those who held the debt certificates. Why does this still matter? Because the world we live in today rests on these foundations. The banking systems, bond markets, and the concept of national debt we use now are the legacy of 17th century Britain. When governments borrow trillions or wars are financed not by taxes but by credit, the same playbook is in effect. Britain may have relinquished its naval dominance, but the financial model it established continues to rule the world. Britain turning to American bankers in World War I and the U.S. emerging as the new center of power after World War II using the same formula, debt, bonds, and the union of money and power, is no coincidence. Today's quantitative easing and international bailouts are merely modern reflections of the same system. We live in a world where credit is a weapon. The lesson of Britain's financial empire is clear. Real wealth lies not in resources, but in controlling the financial system. Those who lend set conditions and direct the flow of capital write history. British bankers discovered this centuries ago and built an empire far more enduring than military victories. The question now is, who holds this power today? As global debt reaches hundreds of trillions, when ordinary people lose while bondholders survive every crisis, have we truly escaped the system, or are we still inside it? Economic history tells us we remain trapped within it. This is why financial literacy is not a choice, but a shield. Understand how money and power intertwine. Question the debts presented as inevitable. See how crises are designed to create opportunities for some. History does not repeat mechanically, but it evolves. If you cannot decipher it, it will crush you in the same gears. The world is shaped less by those who speak the loudest and more by those who plan the best. Keep the show for others, the real power for yourself. Old money, great wealth hidden in silence,